Good afternoon, students. Welcome back to this discussion on audit. So today we plan to get started with this new topic, that is about audit report. Very important topic. Not only theoretically means from the point of view of your examination, but also practically. Okay, so there are a lot of things which are important in this particular chapter. There are a lot of things which are quite interesting also. Okay, so now let's try to understand about the objective of the audit. Now, what is the objective of the audit? To express an opinion on the financial statements. Correct. So that's what the auditor requires to do. Yeah. Now, in relation to this objective, there is one thing which the auditor is required to comment upon. He is required to express an opinion, and that is about the truth and fairness. Yeah. So he is required to comment upon the truth and fairness, means whether the financial statements present a true and fair view or not. Okay. Sometimes in relation to a particular audit, in relation to a particular company, what may happen is that there are some material misstatements. Yeah. Now, in such a case, when the material misstatements are found, when the material misstatements are observed, so what will happen? Will the auditor provide true and fair view? The answer is no. He will not provide a true and fair. Or you can say there is something which he'll want to include in the audit report around those material misstatements. Yeah. So this was about the audit report, means what is required to be covered in terms of the audit objective. Now, when it comes to the expression of this opinion, which the auditor has to do, so how will the auditor express his opinion? So that has to be in writing. Yeah. And this written document is what you call as a report of the auditor. Okay. So this is what you call as a report of the auditor, means the report which is issued by the auditor to the company. Now here again, to whom this audit report is issued, what are the various requirements in relation to audit report. All of these things we are going to cover now. But the important part about the audit is that once the conclusions are drawn, when the reporting has to happen, so that reporting has to be in writing from the auditor to the entity. And what is this reporting all about? This reporting is all about the objective of the audit, is all about the expression of an opinion. Opinion in relation to the financial statements of the company. Okay, now in this case, when it comes to the audit report, when it comes to the financial statements, when it comes to some of these deliverables, let's also try to understand that if you, let's suppose, audit an entity, okay, let's suppose any entity is audited, whether it's a company or a non-corporate. In all of these cases, if you understand, there's only one deliverable which is going from auditor to the entity. And what is that? Audit report. Now this audit process may take 2 months. At times it may take, say, a month, or it may take 8 to 9 months, again depending on the size of the entity, depending on the nature of the business, depending on the complexity which is involved in the audit. But in all of these cases, what is it that the entity is looking at? What is it that the entity is waiting for? Audit report. Yeah, because that's why this audit is being performed. Why? Because the management wants an opinion. Okay, so of course, during the course of audit, when this audit will be performed, So one can say that auditor is providing the services to the entity. There's no doubt about it. Services are being provided, and that is about the audit services. But in terms of the deliverable, what is that deliverable, or what is the only deliverable which the auditor provides? That happens to be the audit report. So other than audit report, can we say that there is any other deliverable which is provided by the auditor to the management? The answer is no. Yeah, so you can now understand the importance of this particular document which you call as audit report. Yeah, clear? All right, so now as regards this audit report, we discussed that this is all about achieving the objectives of the audit. Okay, wherein the auditor will express an opinion. Now it doesn't matter whether the opinion will be clean or modified. We'll discuss all of these terms. What do you mean by clean opinion? What do you mean by modified opinion? Okay, all of these things we'll discuss as we move further. But the important point is that this opinion will go out. Yeah, and this is what the entity is waiting for. Okay, now as regards the audit report, so if one has to look at the audit report, so in relation to audit report, there are various auditing standards which one is required to consider. Okay, so we can say that it's not only about one auditing standard, or there is not only one auditing standard which one can go and check, one can go and apply to look at various requirements of the audit report. The answer is no. There are a lot of requirements of audit which are covered by the audit. Bhargav, am I audible? Okay, I think there was some connectivity issue. Let me just reconnect. All right, so continuing on this, now when it comes to the audit report, so we were discussing about the auditing standards. So this auditing standard SA 700, it deals with the basic requirements, one can say. So when the auditor has to form an opinion, so which auditing standard will the auditor go look at? Of course, SA 700. It also deals with the form and content of the auditor's report. So every audit report has a structure. Okay, so there's a format of the audit report which is required to be considered. So in relation to an audit, auditor cannot just go and change the format. Okay, so that is not something which can be done for each and every engagement, that for say company 1 format will be something else, company 2 format will be something else. No, there's a standardized format of the audit report. And where does it come from? This is again available in this auditing standard. Okay, then in relation to the audit report, there is a specific section which is called as key audit matters. So we'll talk about it. That on this specific section, so I'm talking about a specific section, means a part of the audit report. There's a specific section which requires certain matters to be reported by the auditor, for which there is a separate auditing standard. What is that? SA 701. Okay. Then, if let's suppose auditor considers that there are material misstatements and therefore modification will be required, so which auditing standard is required to be looked at? SA 705. Sometimes there could be some specific matters, there could be some important matters which the auditor is required to emphasize upon. You can say it's a kind of highlight. Okay, auditor is required to highlight some of those points in his report. And there again, for such type of matters, there is a separate auditing standard. What is that? SA 706. Okay. Similarly, there could be various other requirements. We'll talk about all of those requirements as we move further in our subsequent discussions on all of these auditing standards in greater detail. Now, as regards this SA 700, you can say the auditing standard which is about forming an opinion, which talks about the audit report, which talks about the format, which talks about the content which has to be there in the audit report. All of these aspects are covered by this auditing standard, except for some specific aspects like CAM, modifications, emphasis of matter, for which separate auditing standards are available. So you can say in a way that if there is a specific section of the audit report on which a lot of consideration is required due to the applicability of that section on the of the audit report to that particular company, then you will go refer the other auditing standards. And once again, you will get the clarity. Now, as regards the audit report, objective is the most important point, because this report is what? This is the objective driven. Yeah. So I think we have already talked about it, that the opinion has to go out. Where will this opinion be, sort of covered? In the audit report. And this audit report, wherein the opinion is provided, has to be in writing always. Now, writing doesn't mean that you will take a piece of paper and you will write it by hand. Writing means it has to be the written one. So you can always have it on Word file, printed. Yeah, so that's what you call as written. So means it's not something which the auditor will do orally. Okay. So if let's suppose auditor has completed the audit, so auditor can't say that I'll just go and provide this report orally. Yeah. So that is something which is not acceptable. Okay, that doesn't work. So that will be inappropriate on the part of the auditor. Okay, clear? Now, moving further. Now on the screen right now, what you can see is that in an audit report, what are the elements? So you can in a way say that these are the elements, or these are the content which will always be there in the audit report. Of course, some of these sections may or may not be applicable to the entity, which one has to consider again, depending on the applicable auditing standard, depending on the type of transactions, depending on the type of situations the entity may have. Now, in this case, you can also say that it's a kind of format which is available for the audit report. And as regards these format, you can say there are various sections. First, second, third, fourth, fifth, sixth, and so on. Now, in this case, there are few things which are important to be considered. See, when you talk about these elements, there is an order which is required to be followed. So whenever an audit report will be prepared, so this format has to be there, and this format has to have all of these elements in the given order. So what does it mean? That you can't have this basis of opinion before the opinion. Okay, you can't have the management responsibilities coming at the top. Yeah, similarly, you can't say this emphasis of matter you will just take to the last. No, all of these things are not permissible. Okay, and that's why we are saying that audit report has a format. So there's a specific structure which is available for the audit report. So every time one has to go by that structure, every time one has to look at that structure, and accordingly the audit report is required to be finalized. So that's how it is required to be covered. Okay, so this can't be changed, and if you change that, then it will be inappropriate. Okay, yeah. So now in this case, there are a lot of sections, there are a lot of elements in this audit report one can see. So now what we will do is, we'll just look at audit report of a company. Okay, so some of these elements which you can see, of course, they are easy to understand, they are easy to consider while they are written on the screen. But I think you will get a better clarity as around this audit report, as around the elements of these audit report, as around the requirements of all of these sections of the audit report, once you look at one actual audit. Okay, so now what we will do is we'll just go look at one actual audit report. We'll just try to read that in terms of various elements which it may contain. Okay, and in that case, we'll just try to understand as to what is it that is required to be covered by all of these elements one by one. Yeah. All right. So let me just open one document now. Just give me a minute. Okay, so Priyanshi has a query. She is asking, sir, in the book it's given essay 700 revised. So like AS essays can also be revised? Yes, that's correct. See, similar to what you have in accounting. So you have standards. So same way you have standards for auditing. And similar to the revisions that may happen in case of accounting, revisions are always possible. And of course they keep happening. Yeah. So auditing standards undergo a change every time there's a new auditing standard, or maybe a revision in the auditing standard. So you'll see that. Yeah. Okay. Wherever that is considered as appropriate, it is always included in the relevant auditing standard. All right. So now, first of all, so now if you look at this audit report, so it's the audit report of a company. So we can see an actual audit report of a company. Okay, now in this audit report, what is the first thing? First thing is the title. What is the title? Independent Auditor's Report. Okay, so what is the first element? Title. What do you mean by title? See, every document has to have some title. Yeah. Otherwise, how will you identify that? So if it's a report, yeah. So if it's a report, so what will you say? It's the report of the auditor, and the auditor has to be independent. Yes or no? So the auditor has to be independent always. So that's the basic requirement on the part of audit, on the part of every auditor. So that's why every time you will see an audit report, you will see this title, and which will always have this sort of prefix, you can say, independent. Okay. Then, now this is a report. Now this report is meant for someone. Yes or no? So if you issue some document to say another person, okay, if you write something for another person, so you'll always address that. Yes or no? You'll always address that. So there has to be an addressee. There has to be an addressee always. Yeah, to whom the audit report will be addressed. Okay, so now in this case, audit report is addressed to the members of the company. So every time there is a statutory audit, what will you see? Audit report is addressed to the members of the company. So currently we are looking at audit of financial statements of a company, yeah, which is a statutory audit. So that's why this audit report is also addressed to the members of. Now again, this may vary depending on the scope which is there. Yeah, depending on the scope of audit, this addressee may change. See, when it comes to the statutory audit, there will always be addressed to the members. But if let's suppose this is special purpose audit, this meant for management, this meant for board of directors, so you can always address it to those parties. One will have to again go by the scope, go by the requirements, and all of these things are pre-agreed before the audit is started, and that is something which you'll always find in case of an engagement letter also. Okay. Now, in this case, next is about this report. Okay. So now this report is on the audit of standalone financial statements. Yeah. So this report is about the audit on standalone financial statements. So this is also what you call as subtitle. So first of all, you are giving the main title, Independent Auditor's Report. Then you are giving a subtitle. Means in slight more detail, you are saying it's a report on the audit of the standalone financial statements. In this case, standalone is specified because the company might be preparing both standalone as well as consolidated financial statements. Okay, so that's why whenever standalone is given, they are specifying standalone. Whenever console will be given, they will be console. But it's not necessary. Okay, so if let's suppose only standalone financial statements will be given, then this terminology standalone will not come. Yeah. Okay, so now these three were very basic when you talk about title, subtitle, addressee, all of these things. Now comes the most important part, and that is what you call as opinion. See, every audit report has to start with the opinion. Every audit report. Now, what is the meaning of opinion? Opinion means all the conclusions which the auditor has drawn. Yeah. And as regards the financial statements, whether they are free from material misstatements or not, whether they reflect a true and fair view or not, all of these things, where is it that the auditor is going to get this? From the financial statements, from the audit only, correct? And on that basis, auditor will now be commenting upon this, which you call as opinion. So every time there is an audit report, this audit report will start with the opinions para. Okay, so all of these things in the audit report, you will call it as para. So in the audit report, the first part, the first para is about the opinion. Okay, now in this case, there are few things which are important for you to consider. See, whenever auditor will write something in his audit report, he will be like very, very clear. He will be expressing each and everything. He will be providing every required reference, everything which has been checking in quite detail. So let's try to understand, and I think you'll get more clarity when you read this. Okay, so let's read this para of opinion. So now, how does it start? Auditor is saying, we have audited the financial statements of the company which comprise the standalone balance sheet as at 31st March 24. And so first of all, auditor is saying that we have audited the financial statements. So that's how is starting. And statement of profit and loss, statement of cash flows, and notes to accounts, including accounting policies and other explanatory information. Now in this case, one may think that if the auditor will only write the audit of financial statements, so is this not understood that balance sheet will get included therein, profit and loss will get included therein, cash flow will get included therein, notes, all of these things? The answer is yes, but still auditor is giving the complete clarity that as regards the financial statements which he has audited, what do they include? What are the various components of the financial statements? So that when the users read the financial statements, so they should also have the complete clarity that all of these components should be there in that particular set of financial statements. Okay, yeah. So this opinion para starts with this discussion about the work which the auditor has done. Okay, and on what document. So it's all about the financial statements. Now, in the next para, means we are on the opinion para only, means in this section only, opinion section. Okay, so now comes the opinion of the auditor. And let's understand as to what is it that the auditor is writing. He is saying that in our opinion and to the best of our information and according to the explanations given to us. Okay. Aforesaid financial statements give the information required by the Companies Act in the manner so required, and now this is important, give a true and fair view in conformity with accounting principles generally acceptable in India. Further, in relation to all the components of the financial statements, let's understand what does he say. So he's saying that they provide true and fair view in respect of statement of affairs of the company. Can you tell me what is the meaning of statement of affairs? From which document, from which component you get to know about statement of affairs? Over to you quickly. So if one has to look at the state of affairs of a company, where do you go? Which component do you refer? Tell me quickly. Anyone? See, please understand that when the auditor has performed the audit, so in reference of audit of financial statements, auditor is expressing this opinion. So this has to come out somewhere from the financial statements only. Quickly, Jendra says schedule 3. What about others? Where does it come from? Great. Mohit says balance sheet. Very good. See, it's the balance sheet which talks about the state of affairs. Okay. Then it says it's profit. Where does it come from? Statement of profit and loss. It's cash flows. Where does it come from? Statement of cash flows. So can you now again check that while expressing his opinion, he is not only talking about a true and fair view, but he is also talking about each and every component. Understood? Understood as to what is required to be done in case of opinion para. Over to you. Everyone clear on this? As to what is required to be done on the opinion para? Yeah? Clear? Everyone clear? Okay, so now let's look at one question. Okay, so now we'll look at this question. So I've picked up this question from your study material only. Messrs. Amitabh and Associates. They are the statutory auditors of Ringston Limited, which is a company engaged in the business of manufacture of pen drives. Okay, so that's the nature of business. Auditor has started drafting the audit report for the financial year 21-22. CA Amitabh, who is the engagement partner, is of the view that financial statements of Ringston Limited represent a true and fair view. In this case, you are required to draft the opinion para for his audit report. We have just looked at the opinion para of a company. Now, in respect of this company, you are required to draft the opinion para. Can you please quickly try attempt this? How will you draft this? What all things you will include? Yes, so you can just draft, share your answer. See, this is what you will be required to do. So that's why it's important that you start doing all of these things. Okay. Yes, over to you quickly. You can just start drafting this. Yes, quickly. So in the opinion para, if you remember, there were two sub-paras we discussed. So just apply the same thing, okay, in a similar manner and try to revert on this. Just try to apply that in the same manner, the way we discussed. Okay, so don't worry about the language. You may be thinking, sir, oh, we may not be able to match the exact language. It doesn't matter. Yeah, so just try to do this quickly. Over to you quickly. So should we go to the solution? Yes, quickly. Should we go to the solution then? Yeah. Okay, so now in this case, first para is the one wherein the auditor will talk about the audit. Yes or no? that we have audited the financial statements of the company comprising of different components. So in this case, auditor will write, we have audited the financial statements of Ringston Limited, which comprise the balance sheet, statement of profit and loss account, okay, cash flow statement, and the notes to accounts and other explanatory information. So first of all, in a way, auditor is just broadly talking about as to what is it that the auditor has audited. Then in the second paragraph, now the auditor will talk about the opinion. Okay, so in this case, the opinion is clean. Clean means when there is no modification, that is what you call as clean opinion. Okay, so when there is no modification, that is what you call as clean opinion. Yeah, so now in this case, auditor will write, in our opinion and to the best of our information and according to the explanations given to us, aforesaid financial statements give the information required by the Act, which Act? Companies Act, in the manner so required and give a true and fair view in conformity with accounting principles generally accepted in India of the state of affairs of the company as at 31st March 22 and profit and loss for the year ending on that date. If let's suppose cash flows is included, then he will also talk about the cash flows for the year ending on that date. Okay, yeah. So this is how it's required to be drafted. Can you see this? It's exactly similar to what we discussed. Okay, so it's exactly similar. So that's how you are required to apply this now. Understood? Yeah, so this is what you should try to do. Okay. Yeah, so let me just increase the, so I have increased the font size slightly. All right, now second section. See, after the opinion para, auditor will now explain. See, every time you give an answer, what is the requirement? That you should not only write yes or no, you should also explain as to why it is yes, why it is no. Correct? Yeah. So same goes with the audit also. Now the auditor will also explain opinion, means why such an opinion has been issued. Okay, and this is what you call as basis for opinion. Yeah. Now in this case, let's again read this basis of opinion, and then you will get a clarity as to what is required to be done in this case. So auditor says, we conducted our audit in accordance with the auditing standards specified under section 143 subsection 10 of the Act. Act means the Companies Act. Our responsibilities under those auditing standards, see, SA is the abbreviation they have used. Our responsibilities under those SAs are further described in auditor's responsibility section. Now this is important. In this case, if you look at the responsibilities, auditor is talking about his responsibilities. Okay, over here in the basis for opinion, auditor is talking about his audit responsibilities. But he is not explaining them in detail. Why? Because there is a section of the audit report wherein all of these responsibilities he has already explained in detail. Yeah, so that's why, to avoid duplication, he is giving reference of that section in the auditor's report. So when we'll move, you will get to see that there's a separate section on the auditor's responsibility. Okay. Now, please remember that in an audit report, there are a lot of things which are interlinked. So that will again be very, very important for you to understand. Okay. Now, in this case, there's a linkage of auditor's responsibility in this para basis for opinion. Yeah. Further, auditor is saying that we are independent of the company in accordance with the code of ethics issued by the ICAI. So auditor is explaining here that as regards this audit, we are independent. Yeah, together with the ethical requirements that are relevant to our audit of the financial statements under the provisions of the Act, under the rules thereunder, and we have also fulfilled our ethical responsibilities in accordance with those requirements and the code of ethics. Okay. So now auditor is first of all explaining that this audit has been conducted as per the requirements of the law. He is explaining about his audit responsibilities. He is also explaining that he has been independent throughout the course of audit. Then he is explaining that we believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Now, this is very, very important. Because if you go back to the objective of audit, what is that? That the auditor should obtain reasonable assurance. Yes or no? Yeah. Auditor is required to obtain reasonable assurance. Around what? Around the audit of financial statements, for which auditor is also required to ensure that he has in place sufficient and appropriate audit evidence. Okay, so in his basis, auditor is explaining that this is something which I have obtained. Okay, so as per his understanding, the audit evidence which he has obtained is sufficient, is appropriate. Okay, yeah, clear on this? Yeah. So in the basis for opinion para, once again you can see that how the basis has been explained by the auditor. Correct? Clear on this? Any questions so far? No? No questions so far? I'm just hoping everyone is clear. Yeah? Alright, so now what we will do is we'll look at again one question in the study material. Messrs. Kite, Wright and Associates are the statutory auditors of Prime Deluxe Limited for the financial year 21-22. Okay. So there's a company, Prime Deluxe Limited. At the time of finalizing the audit report, one of the engagement team members, Mr. Robin, asked the engagement partner, CA Kite, as to what all should be included in the basis of opinion paragraph. Engagement partner, CA Kite, explained the team in detail and asked Mr. Robin to draft subsection for the auditor's report of Prime Deluxe Limited. Now in this case, what you should do is you should also try and draft that. And we've just discussed that. So quickly, if you can just try and draft this, over to you. Or maybe at least the pointers you can tell me that when you will write the basis for opinion para, so what all things you will include? Tell me what all things you will include, what all points you will include. So what is going to be the coverage? In terms of the content, what will you include here? Yes, quickly, over to you. Yeah, anyone? So should we go to the solution? Yeah. Okay, now first of all, auditor will talk about the audit, means this audit has been conducted as per auditing standards, which is there as per the Companies Act. Okay, then he'll talk about his audit responsibilities, for which a separate section will always be there in the audit report. So he'll give the reference of that section. Then he'll be talking about his independence, ethical requirements. Yeah. Fourth, then he'll talk about the audit evidence which he would have obtained, on the basis of which such opinion has been given. That's it. Yeah. So broadly we can say there are 4 pointers which are required to be covered over here. Clear? Everyone clear? Okay, now next section. See, the next section is about the going concern. Now, if you remember, we have already discussed going concern in our previous sessions. So can somebody explain what is going concern? What is it that we discussed about going concern? What is required to be considered in respect of going concern by the auditor? Over to you. So when it comes to the going concern, what is required to be considered? Quickly. So what will you do? What will you include in respect of going concern? Tell me quickly. In respect of going concern, what do you include? All right. So now, if you remember, as around the going concern, we discussed that every time the financial statements are drawn, so there is a fundamental accounting assumption of going concern. Yes or no? Yeah. I think Prem has mentioned this. In this case, entity, whether it is able to continue its business for the foreseeable future. So this assessment has to be done by the auditor. Or you can say this assessment of the management needs to be reviewed by the auditor. Okay. Now, as around this, some of the situations may arise. Let's try to understand all of those situations. Okay. Now, let me just take you to those situations. Just give me a minute. So, what are the situations you may get to see as around the going concern? So, few situations may arise. Either the auditor may say that going concern assumption is inappropriate. Remember, we discussed this. Either the auditor may say going concern assumption is inappropriate, but the management may not agree. Management may say no, going concern assumption is appropriate. Then what will happen? Auditor will consider modification in the auditor's report. Now, what is a modification? We'll talk about it later on. Another situation is going concern assumption is appropriate, but material uncertainty exists. Okay, so as regards the going concern assumption, it is appropriate, but material uncertainty exists. In this case, Further two scenarios are possible. What are those? As around this material uncertainty, management is ready to give the adequate disclosure. So management is providing the required disclosures. So if the management does that, then what will happen? Modification will not be required. But auditor will have to highlight this disclosure somewhere. And how will the auditor highlight this? Through a para in his audit report that you call as MUGC. Okay, through a para in his audit report which is called as MUGC. Material uncertainty around going concern. If the going concern assumption is appropriate but material uncertainty exists and the management is not ready to provide the required disclosures. Let's suppose now we are on this situation. Management says that, okay, material uncertainty is there, but why to disclose? Why to unnecessarily highlight that in the financial statements? Or even if you want me to disclose as a management, I'll write something which auditor believes is not appropriate, is not adequate for the understanding of the users of the financial statements. In which case, once again, what will happen? Modification in the audit report will be required. Now, please remember that this situation of whether the going concern assumption is appropriate or whether the going concern, this situation of going concern assumption becoming inappropriate or having any material uncertainty as around the going concern will not be there in respect of each and every company. Yeah. Only if there is some problem, then you will have this scenario, or you can say some of these scenarios will arise only if there are some indicators available for these scenarios. Otherwise, what? So it's not that for every company you will have this situation. No. For every company, by default, this situation will not arise. And that's why every audit report that you look at, okay, every audit report that you look at will not have this section of going concern. This will only be there when it is applicable to the company. Okay, so the next section is about the going concern, about the material uncertainty. But as we discussed, that this needs to be evaluated. If at all this is applicable to the company, so this will be included. If this is not applicable to the company, this section will not be included. You do not think that all these elements have to be necessarily there. Of course, most of them will necessarily be there, but going concern, MUGC is one para which may or may not apply. So only if it applies, this will be included. If it doesn't apply, this will not be included. Okay, then the next para is about key audit matters. So I'll just mark this next para, next section, key audit matters. We will discuss that in greater detail later on. Okay, as of now, I'm not discussing this particular para, key audit matters. Now, what I'm doing is, after key audit matters, I'll just move on to the next section. Okay, so key audit matters I have skipped, and I'll explain you as to why this has been skipped, because when we'll cover this in greater detail, you'll get to know about it. That it's a detailed discussion. Huh? Okay, so separately we'll cover this. Now, next section talks about other information. Now, what do you mean by other information? See, the document which you currently see on the screen is called as annual report of the company. In the annual report of the company, you will find a lot of documents. Okay, let me just go to this index. Yeah, so let me just go to this. Let me just see as to what all things are included in this annual report. So if you can say this is the annual report. Okay, so this document which is in front of you, this is the annual report. So this annual report includes various types of reports. It talks about some integrated reporting framework, okay, which is again a kind of report. Nothing to do with financial statements. Okay, then it talks about director's report. So there is a report, director's report, which is included here. Okay. Yeah, so I think we have just jumped onto that document. Sorry. Then it talks about another document, another report, which is called as management discussion and analysis. Then there's a report on corporate governance. Then there's a report on business responsibility and sustainability. Yeah. And then you have this consolidated financial statement, standalone financial statements. So in the annual report, you can see that other than financial statements, various other reports are also included. Okay. Various other reports are also included. Now, what is the relevance of this? So why are we discussing this aspect? Why are we looking at the index? See, when it comes to the audit, okay, now what will happen? If let's suppose you are the user, you are the stakeholder of this company, and if you want to look at the financial statement, so what will happen? You will pull out this document. Yes or no? So if let's suppose you want to go through the financial statements of this company for any reason, so how will you access that? You will pull out this report, annual report. For example, I wanted this audit report to be discussed with you. So that's why what did I do? I had to download this entire annual report. Correct? And in this annual report, there is not only the audit report or the financial statements, various other reports are also available. Yeah. Now, let's try to understand one of the situations which may arise. Okay, just give me a minute. Okay, so let's suppose you are the stakeholder of this company. You are using the financial statements of this company. So when you go look at the financial statements, you find that sales of the company is say 1000 crore. Okay, in the financial statement, what did you find? Sale is reported as 1000 crore. Now, along with the financial statements, you can see a lot of other reports are included by the management company, and there's a report on MD&A, management discussion and analysis. Now, you are also reading this, or let's suppose you are required to read this for your purposes. And somewhere in this document, sale has been reported for the same period for the company as 1050 crore. Can you see this? Sale of the same company for the same period at two places. If you find reported with a different number, can you tell me what will happen? So if let's suppose you are the user, then what will happen? Let's suppose if you are the user, then what will happen? Yeah, it may have been a mistake either in the financial statements or MD&A, or maybe it's been mentioned specifically for any reason. But if let's suppose you are the user, you are the stakeholder, and if you read this, then what will happen? How will you deal with this? There will be a confusion. Yes or no? It will lead to a confusion. Correct? Yeah. So will you get confused or not? Shreya says yes. And due to this confusion, now your reliance on the financial statements may go down. Because one of these things, one of this information, one of this report is wrong for sure. Yes or no? Yeah. So that's why an additional responsibility has been placed upon the auditor. Now let's try to understand what is that additional responsibility. Additional responsibility is about this other information. See, whenever the financial statements are presented, and along with those financial statements, some other information is also presented. Okay, for example, in the annual report, financial statements are presented, director's report is also presented. Okay, in such a case, there is some responsibility. Let's try to understand what is that. The company's management and the board of directors are responsible for other information, no doubt, because if you look at director's report, all of these other information, that's not the part of audit. Yeah, because auditor has only audited the financial statements. So one can say that's not a part of audit. Now this other information may comprise of a lot of things other than the financial statements and auditor's report. Yeah. Now, in this case, auditor needs to ensure that there is consistency. So auditor says that the other information comprises the information included in company's annual report, but it does not include financial statements and auditor's report. He is saying that other information is prepared by the management, board of directors. It doesn't include financial statements. Yeah. Further, he is saying that the annual report is made available to us after the date of this auditor's report. So that's why we couldn't look at that other information. Now he is clarifying that as regards our opinion, which you have just read, that doesn't cover other information. Okay, so he's saying that user should not think that we have also audited the other information. We are not providing any opinion on that. Okay, in connection with our audit of financial statements, our responsibility is what? Is to read the other information when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained during the audit. Yeah. So now here again, please understand that auditor is only going through that other information. He is not auditing that. And why he is going through that? So that he can check that numbers at two places are same. Consistency is there. Okay. So he's just trying to ensure the consistency at two places. So that's the objective. That is what he's just trying to look at. Okay, yeah, but at the same time, even though he is reading that, he is trying to ensure the consistency. He has clarified. Now, this part is very, very important. He has clarified that we are only providing the opinion on the standalone financial statements. We are not providing any sort of assurance, any opinion on any other document, whether that is director's report, VRSR, or say MDNA, or any other information which is going along with the financial statements. Clear on this? About this section, other information? Everyone clear? Generally, there is a lot of confusion as around this section. I'm just hoping everyone is clear now. Any questions, any doubts so far? No, Shreya is clear on this. Very good. What about others? Any questions, any doubts? Okay, Priyanshi is also clear. Okay, great. So now what we will do is, before we move on to this next section, I think, let's take a break. Yeah. If you have any questions, doubt, just give me a minute. Let me just check if they have any queries. No, so I don't see any further queries from them. Okay, so I think we can take a break. Huh? Yeah. So let's meet in 15. All right, so let's continue. I think there's one query. Let me just go through this query from Shreya. Shreya is asking, sir, this other information in the annual report will always be made available to the auditor after the date of audit report. Should the auditor request for the other information, or he can just clarify in his auditor's report like what you have shown? No, so it's not that it will always be made available after the auditor's report. It depends. Okay. Though it's correct that in most of the cases this is finalized after the auditor's report, but generally a draft version of this is available. Okay, during the course of audit only, when the financial statements gets finalized, when the auditor is about to issue the report. Okay, generally during that phase, this draft document is available, which the auditor can always go and check. Yeah, so that's how it's required to be done, and that's how the auditors generally take it up. Because in any case, objective is not to audit this. Objective is to just go through this. Yeah. And to ensure that any inconsistency should not be there. Okay. The other query, Shreya is asking, sir, other information para. So there is one para which you call as other information, which we just discussed. And there was also a brief discussion on other matter para. I think not really a discussion, but we touched upon this other matter para. So are these same? Answer is no. They are very much different. Other matter paragraph is completely different from what you see in other information para. Now, what is that other matter para? We'll talk about it. Once we'll be looking at modifications, EUM, all of those things. Okay, that is when we'll look at the other matter paragraph. But you can understand that this is different from other information. Okay. All right. So now moving on to the next section. Now the auditor is talking about the responsibilities of the management. The responsibilities of TCWG. Remember TCWG? Those charged with governance. Okay, board of directors. Now you may be thinking that, sir, this is an audit report wherein the auditor is required to express an opinion. Okay, everything is all about audit. Then what is the objective of specifying the responsibilities of the management? And in any case, even if we look at the responsibilities of the management, are they not clear amongst the auditor and the management? The answer is yes. So when the engagement is taken up, there is an absolute clarity as to who is going to do what. If you remember this engagement letter we discussed, there again, everything is specified. What are going to be the responsibilities of the management? What are going to be the responsibilities of the auditor? It's specified. But still, in the audit report, there's a purpose as to why all of these responsibilities are put down again. One, when the user is looking at the financial statement with the audit report, okay, he should get this clarity that all of these financial statements was the responsibility of the management. Because the user stakeholder, they do not have the access to all of those documentation which has been exchanged between the auditor and the management. So how will they get to know about it? They may be thinking that the financial statements are prepared by the auditor. Yeah. Or they may have this complete different understanding which may not be correct. So that's why it's important to highlight, to specify, and to detail out. In fact, in this section, you'll see that each and everything is laid out in a very clear manner. Okay, as around the management's responsibilities, everything is laid out in a very clear manner. So let's try to understand as to what all responsibilities of the management and board of directors are and how the auditor is explaining that. Now, auditor is writing this, okay? Company's management and the board of directors are responsible for the matters stated in section 134 with respect to preparation of standalone financial statements that give a true and fair view of state of affairs, profit and loss, cash flows in accordance with generally accepted accounting principles, including the accounting standards. So he is clarifying that this financial statement that you check, okay, which has been prepared as per the requirements of Companies Act, which has got certain components, okay, which is expected to give a true and fair view. Who has prepared that? It's the management. Further, he says that this responsibility also includes maintenance of adequate accounting records in accordance with provisions of the Companies Act for safeguarding of assets of the company. Okay, yeah, for safeguarding of assets of the company and for preventing and detecting frauds and other irregularities, selection and application of appropriate accounting policies, making judgments, making estimates that are reasonable and prudent, design, implementation, maintenance of adequate internal financial controls that were operating effectively for ensuring the accuracy and completeness of accounting records relevant to the financial statements. So in this para, you can understand that each and everything in relation to the entity belongs to the management. And that is what the auditor has also clarified. Okay, he has explained in this particular para. Then, in preparing the standalone financial statements, management and board of directors are responsible for assessing the company's ability to continue as going concern. Now you may be thinking that, sir, going concern is already covered. There was a section, but why is this repeated? See, it's not repeated. See, that section, of course, is about the going concern, but there is an aspect of reporting on that. What if no reporting is required there? Still, the management is required to assess this or not. Management needs to consider that this is the fundamental accounting assumption and accordingly do the accounting or not. So auditor is clarifying that all of these matters related to the going concern, these are expected to be taken care of by the management board of directors. Board of directors is also responsible for overseeing the financial reporting process of the company. Okay, so not only the management, if there is anything which is the specific responsibility of board, auditor has specified that. Now, if let's suppose you are the user of this financial statement and you use this audit report, you are reading this audit report, so you'll get to know that all of these internal controls, all of these frauds, detections, okay, all of these things as around the preparation, presentation, if you look at the accounting policies, so they have not been picked up by the auditor. They have been selected. All of these have been prepared by the management, by the board of directors. They were responsible for that. Of course, auditor has audited that, but the primary responsibility for that was that of the management and not the auditor. Okay. Yeah, clear? Everyone clear on this? Alright, so now in relation to this management's responsibility, let's look at one question. So once again, I'll go to that study material. Let's look at this question 5. Diamond Shrine Limited is a company engaged in the manufacturing of detergent. Messrs. Bright and Associates are the statutory auditors of the company. Explain how the para related to management responsibility will be included in the auditor's report. Simple. Over to you. Quickly. I think we just discussed. Maybe you don't elaborate on this, you don't put it down completely, but at least the pointers which you believe are required to be included, you can just specify all of them. Okay, yes, over to you. How will you include this? Quickly, how do you include this? What all things you will include as regards the management's responsibility? Over to you quickly. Even if the pointers you can provide, I think that will be helpful, because please remember, anyways, all of these things you'll have to just, consider. You'll have to, or maybe you are required to draft all of these things. So that's why it's very, very important. Okay, so Shreya says that one will be about the preparation. Second will be about the design of internal controls, implementation of internal controls. Okay, so these are a couple of things. Any other thing that comes to your mind? So let's try to read through this. Okay, so now what all things you will include? Then Shreya says maintaining the accounting rewards. That's correct. Okay, now let's read this again. Company's board of directors is responsible for matters specified in section 134, which is around preparation of financial statements. Okay, wherein all of the components have been specified. This responsibility also includes various other things. Now, all of these points are very, very important. Why? Because they are all related to the financial reporting process. Because over here, we are just trying to look at the overall process. Yes or no? Yeah. Maintenance of adequate accounting records. Provisions of the Act for safeguarding of assets, preventing and detecting frauds and other irregularities, selection and application of appropriate accounting policies, making judgments and estimates that are reasonable and prudent, design, implementation, maintenance of adequate internal financial controls. Okay, as to whether they were operating in an effective manner for ensuring the accuracy and completeness of accounting records. All of this is the responsibility of whom? Management. Yeah. Further, it says management is responsible for assessing the company's ability to continue as going concern. See, the way you can just try to remember some of these points could be: one, you can just remember preparation of financial statements. Second, you can say going concern. Third, you can just mark the points related to internal controls, fraudulent reporting, accounting policies, design, implementation, maintenance of internal controls. Okay, so that's how you can just try to remember all of these points. Because if, let's suppose, tomorrow you are required to draft this, So you can at least put down all of these points. Okay, so don't think about the language, because language you will not be able to exactly match the way it's covered over here, which is completely okay. So you should not be thinking that I have not been able to match the exact language, which is fine. Yeah, clear? Yeah, and further, then you'll write that board of directors are also responsible for overseeing the company's financial reporting process. Okay, now moving further. Now we will come to the next section, that is about responsibilities of the auditor. There was a section in the auditor's report wherein auditor's responsibilities are required to be covered. But those were not covered in detail. In fact, the reference of this section was given over there. Do you remember which section was that? Tell me quickly, which section was that? Very good. So Shreya says basis of opinion. Yeah. I think same is the response from Prem. Very good. See, now you can just also understand the linking. Okay. Now, in this case, auditor has covered everything as around the responsibilities which are passed on to the management in a way. Yes or no? Passed on, or you can say primarily they were the responsibilities of the management. So that's why auditor has been able to clarify. Okay, so he has just tried to ensure that all of these things have been explained, covered. But what is it that he was supposed to do? What was his objective? What was his role and responsibility? Now he is explaining those pointers also. Okay, so now this is again laid out in a detailed manner. So let's understand. What it says that our objectives are to obtain reasonable assurance. Now, can somebody explain the meaning of reasonable assurance? In the audit objective, this discussion is already there about the reasonable assurance. Can somebody explain what is the meaning of reasonable assurance? Okay. Saying high level of assurance. Okay. Anyone else? Prem says high level of assurance by obtaining sufficient and appropriate audit evidence. That's correct. Now, in relation to reasonable assurance, another point which needs to be understood is that absolute assurance is not obtained by the auditor. Okay, and this reasonable assurance will always carry some limitations. So let's read this complete para and then we'll have a discussion on this. Yeah. Sunil says a high level of assurance is there, but it's not absolute. That's correct. Okay, now our objective is to obtain the reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Okay, so at the first place, he has explained the objective of the audit. Now you may be thinking, sir, is this required to be covered? Answer is yes. Because any user of the audit report, he should understand what is the objective of audit. That's how you will start. When you will explain to somebody that this is my objective, this is why this thing is done. Okay. Now, because you have covered some of these auditing standards, so you understand the meaning of reasonable assurance. But a layman, let's think about it from the perspective of a layman. Do you think a layman can understand the meaning of reasonable assurance? Answer is no. He may not know this. Okay. So that's why for such person, now what is this reasonable assurance is also explained over here. Auditor is explaining about this reasonable assurance. Okay. So there should not be any ambiguity. Complete clarity is provided in the auditor's report. What is that? Reasonable assurance is a high level of assurance, but is not a guarantee. Can you also understand that when you are conveying to somebody high level of assurance, again somebody may think, oh, it's a high level, so it means almost everything is covered. But no. Auditor is also saying that please don't think it's a guarantee. About what? That an audit will always detect material misstatement when it exists. Okay, which means that there are chances that material misstatements may go undetected. That's the inherent limitation. Okay. Further, he is explaining the misstatements. He's saying they may arise from fraud or error and are considered reasonable material. Now, if you look at it from the perspective of any user or a layman, will he understand this word material? So that's why auditor is explaining materiality also. He's saying misstatements, which is what? Which is nothing but a fraud or an error or any type of mistake. They will be considered material. They will be called as material misstatement if individually or in aggregate they could reasonably be expected to influence the economic decisions of the users taken on the basis of these financial statements. Okay. So in this case, can you please understand that each and everything auditor is just trying to explain? Okay. And it's not that this is the only para. There are a lot of other things. Let's read through all of those points. As part of an audit in accordance with auditing standards, what are the roles? What are the responsibilities? So auditor is saying we exercise professional judgment. We maintain professional skepticism throughout the audit. Can you please explain what is the meaning of professional skepticism? Anyone? What is the meaning of professional skepticism? What is the meaning of this? What do you mean by this? Shreya says being alert. Anyone else? What do you mean by professional skepticism? Quickly, over to you. What do you mean by this? So it means questioning mind. You go ask questions. That's what is required to be done. Yes or no? Yeah? So you go ask questions. Okay. Now, he's saying we also identify and assess the risk of material misstatement of the financial statements, whether due to fraud or error. Design and perform audit procedures responsive to those risks. Obtain evidence that is sufficient and appropriate to provide a basis for our opinion. Risk of not detecting a material misstatement resulting from fraud is higher than the one resulting from error. Why? Because fraud is intentional. So that's why in that case risk will increase and chances of detection will reduce. Okay. Further, he says we also obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances. We are also responsible for expressing an opinion on whether the company has adequate internal financial controls with reference to financial statements in place and operating effectiveness of such controls. Okay, then he's saying we also evaluate the appropriateness of accounting policies. Now, please remember, selection, application of accounting policy, whose responsibility is that? Can you tell me? Whose responsibility is that? It's the responsibility of the management. And once that is done, somebody will have to review that, evaluate that. That is what auditor is saying here. Now, all of these things, you will find that these pointers were there in management responsibility also. But the role and responsibility is different. Over here, it's about checking. In case of management, it's about preparation. Okay. Now the auditor says we also evaluate the appropriateness of accounting policies used and reasonableness of accounting estimates and related disclosures made by the management and board of directors. Then he says we also conclude on the appropriateness of management and board of directors use of going concern basis. So going concern basis, who has used this? Management, board of directors. But we are concluding on that. Means we are checking whether it's appropriate or not. Okay. Yeah. He's saying if we conclude there is a material uncertainty, we are required to draw attention in auditor's report to related disclosures in the financial statements. Okay. Then he says we also evaluate the overall presentation, structure, and content of financial statements, including the disclosures, and whether the financial statements represent the underlying transactions and events in a manner that achieve fair presentation. Okay, so now you can understand that roles and responsibilities of auditors are huge, but all of them have been put down over here. So auditor will not say, okay, I have written 2-3 pointers, so these are good enough. No. Yeah. So now, auditor is saying we also communicate with those charged with governance. Remember, communication with those charged with governance. And what is required to be communicated to them? Planned scope, timing of audit, significant audit findings, any significant deficiencies in internal control. Then he says we also provide those charged with governance with a statement that we have complied with relevant ethical requirements, including independence. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of standalone financial statements and are therefore key audit matters. So somewhere he is talking about certain matters which are very, very significant and which have been reported in the audit reports under the section key audit matters that we have skipped. Okay, so we'll talk about it later. Then he says we describe these matters in our auditor's report unless law or regulation precludes public disclosure. Okay, so if there is a restriction, then we will not include. Otherwise, we will include. Yeah. So now in this case, each and everything as around the auditor's responsibility has been covered. Okay, yeah, all right. So now let's look at one question which is again linked to this. Messrs. Ajay, Vijay and Associates are statutory auditors of Sarovar Limited for financial year 21-22. Company is engaged in the business of manufacturing of water bottles. At the time of finalizing the auditor's report, one of the audit team members asked CAJ, who is the engagement partner, to advise as to how the auditor's responsibilities can be shown in an appendix to the auditor's report. Draft the auditor's responsibility paragraph so as to advise the audit team member. Okay, so in this case, what are you required to do? You are required to draft the auditor's responsibilities paragraph. Okay, so this needs to be again explained in a similar manner. Yeah, so there are a lot of paras, there are a lot of pointers over here. So I'll not just get into each and everything. Yeah. Okay, so now moving on to next section. Report on other legal and regulatory requirements. Now we are not talking about other information. Okay, so other information we have discussed. Now this section talks about other legal and regulatory requirements. Now what does it mean? See, sometimes there could be some specific requirements of the law, okay, which the auditor is required to fulfill. Now what could be those specific requirements of the law? Those requirements could be in relation to anything. Okay, again, we do not have any list which is specified over here. In relation to audit of financial statements of an entity, if let's suppose Companies Act requires auditor to cover something, so the auditor may already have covered that during the course of audit. But let's suppose that legal requirement specifies that auditor needs to write down that pointer or as to how that area has been covered by the auditor in his audit report. So what will the auditor do? Auditor will have to write it over here. Yeah. So this particular section is all about looking at any legal or regulatory requirements which is specifically required to be covered by the auditor. Now, what do you mean by specifically? See, in respect of these requirements, auditor may or may not have performed the procedures otherwise. But now, because these are specified, so the auditor will have to perform the procedures in relation to this. Further, auditor will also have to comment about these requirements. Auditor's report. Okay, so that's how it's required to be dealt here. Yeah. Now, let's try to look at some of these requirements. First, I'm not sure if you know about CARO. Anybody who has an understanding of CARO? Over to you. Anyone who understands CARO? Who may have looked at CARO? Prem says no. So what is CARO? There is a Companies Auditors Report Order 2020 issued by central government as per the requirements of section 143 subsection 11 of the Companies Act. Okay, wherein there are two paragraphs, para 3, para 4. What are these? You can say it's a kind of checklist. Okay, it's a kind of checklist. In this case, auditor is required to cover certain areas while auditing the financial statements of an entity. And in respect of those areas, auditor is required to provide his comments. Okay, so there are a lot of points. It's a kind of checklist. Now, is it a legal requirement? Can the auditor say that I have covered all of these points? Of course, he may have covered during his audit procedures, but still he is required to comment upon all of those points. So where will the auditor go and write all of those points? In this section. But now in this section, if the auditor will write about all of those points, okay, so this document may not look nice. Why? Because unnecessarily in this particular section, if you bring out say 20-25 points, again for which some of the description may be required. Okay, so this may not look very nice. Okay, it may be difficult to read. Some sort of confusion may arise. Okay, so to bring an ease in respect of this, generally what an auditor will do is, auditor will bring out this checklist, or you can say this requirement, as an annexure to this report. So you can say CARO is also a kind of report or a part of report. So currently the report that we have been discussing, for which we have discussed the structure as per SA 700, for which we have been looking at various elements, this is called as the main audit report. Okay. And CARO happens to be one part of this main audit report, but this CARO is not forming, or you can say it's not included in the main report itself. A reference of this is included. Why? Because an annexure is provided for CARO. Yeah, so in a way, CARO reporting is covered by the main report, but it's provided separately. So let's also understand as to how is that provided separately. And there again, you will find that there is a complete clarity which the auditor would maintain while providing that CARO in the form of an annexure. Okay, so let's try to look at that. So what I'll do is I'll just flip to CARO. We'll not be looking at the pointers of CARO. That is one part we'll cover later. As of now, idea is to just give you a feeler as to how this annexure is laid down. Okay, so now after this report, so this report is continuing. Okay, what do you find? You find there is an annexure A. Can you see this? Yeah, can you see this annexure? Annexure A. Now in this annexure, they have given a complete reference. It says annexure A to the independent auditor's report. Remember the title of main audit report on the financial statements of the company for the year ended 31st March 2024. Further, just look at the referencing. When you go to CARO, so there is a reference of main audit report. So it says this annexure A is referred in para 1 under report on other legal and regulatory requirements section of our report of E1 date. So if you go to main audit report, they have given an annexure and annexure is given a reference. When you go to annexure is also giving the reference of main audit report, so that a linkage between these two can be established. Otherwise, user will get confused. Yes or no? Otherwise, user will get confused. Okay. Now, in this CARO, there are various points which the auditor is required to comment upon. We'll come to all of these points later on. Okay. Now, going back to this section, report on other legal and regulatory requirements. Shreya is asking, sir, even date means same date. Okay, means of the same date. So these are not of two different dates. And that is how it should be like. Right? Now, next. So the first para under report on other legal requirement, or you can say first pointer for other legal requirements was in respect of section 143.11. Now, there are few requirements as around the audit under section 143 subsection 3. Now, these are also required to be put down. So let's read these requirements one by one. Okay. Now, auditor says we have sought and obtained all the information and explanations which to the best of our knowledge and belief were necessary. Yeah. So this is something on which auditor is required to comment upon. Whether the auditor has obtained all the information necessary for the purposes of audit. So auditor is saying yes. Next, auditor says, in our opinion, proper books of accounts as required by the law have been kept by the company so far as it appears from our examination of those books, except for the matters stated in para 2BF below on the reporting under rule 11G of companies audit and auditors. So he's saying there is a reporting. So this is 2A. When you go to 2B, yeah, point F. So there's one exception to this. So we'll look at that in that particular point. Okay, now next. Standalone balance sheet, P&L, cash flow dealt with by the report are in agreement with the books of accounts. So auditor is required to comment upon this. Further, as per section 164 subsection 2, auditor is required to obtain the written representation from the directors. So he's saying we have obtained. Yeah, and none of the directors is disqualified as on the reporting date. Again, looks okay. Next, modifications relating to maintenance of accounts, other matters connected with, as are stated in para 2AB above and 2BF below. Okay, so all of those we are covering. With respect to the adequacy of internal financial controls with reference to financial statements of the company, he is saying refer annexure B. Now here again, in certain categories of companies, auditor is required to provide a report on internal financial controls as to whether they are operating in an effective manner or not. Okay, now once again, what is it that the auditor is trying to do? He is not including the report here, otherwise it will become hodgepodge. So auditor is saying, okay, fine, this is a legal requirement, I'll specify this over here and I'll cover that in another annexure. So annexure A is for Caro. After annexure A, you will find there will be another annexure, annexure B. This is the report on internal financial controls, wherein again you will find that referencing in a very clear manner. So it says report on internal financial controls with reference to the financial statements covered under section 143. Now there is a reference referred to in para 2AG under legal report on other legal and regulatory requirements section of our report. Okay, now once again, this report we can just look at later. Yeah, So generally what you will find is there is a main report, then you have CARO and IFC. CARO and IFC will again be dependent on the applicability. To each and every company they are not applicable. So wherever they are applicable, yeah, it will be provided. Fine. Now, moving further. Okay, now moving further. Now, similar to some of these legal requirements, there are various other legal requirements which the auditor is required to take care. Okay, so again, we do not plan to cover each and every legal requirement. You can just flip through this later on. But please remember, any legal requirement which is there and which the auditor is required to comment upon has to be necessarily included if that applies to the company. Okay. Yeah. Now, let's look at one point which was covered above, if you remember. Okay. When the books of accounts, all of these things were mentioned, and one exception was specified. So 2BF, we'll go through this 2BF now. Okay, so what is there under this 2BF? So 2BF. Now it says reporting under Rule 11 so and so is applicable from 1st April 2023. In this case, auditor is required to comment upon the audit log. Okay, so the accounting software which is used, whether that carries the audit trail or not. I'm not sure whether you are aware of this requirement or not. So this is a mandatory requirement. So now what is it that the auditor is saying? That we are required to comment upon this. So this is applicable to the company from 1st April 23. Now let's understand how is this reporting done. Auditor is saying based on our examination which included test checks, except for the instances mentioned below, company has used accounting softwares for maintaining its books of accounts, which have a feature of recording audit trail, and same has operated throughout the year for all relevant transactions. Okay, so he's saying except for these two situations, everything was in place. So first, he's saying feature of recording audit trail facility was not enabled at the database level. So more of technical requirement. So wherever was there any exception, he has specified. Further, he is saying for the period where audit trail facility was enabled and operated throughout the year, we did not come across any instance of audit trail feature being tampered with. Okay, clear? All right. So now moving further. Now, how do you conclude? So these were the various elements, or you can say sections of the audit report, main audit report, except for some which we have skipped. We have skipped CAM, we have skipped some modifications because they may or may not apply. We have skipped EOM, all of these things that we'll cover separately. Okay. Now, how will the report be entered? This report needs to be signed by the auditor. See, this report which is there in front of you is the printed one. So find this sign. This will always be signed by the partner. So in the firm name, then you will have the registration number, then you will have this partner, then you will have this partner, then the membership number, and the date and place will also be there. Date and place will also be there. Date and place will also be there. Okay. Further, for every audit report, one code is required to be generated. This is called as UDIN. Yeah, this is called as UDIN. Now, what is this UDIN? It's the unique document identification number. Okay. Now, in this case, for this unique document identification number, let's suppose, what is the need of this? Let's suppose, say somebody is not a chartered accountant and he goes signs the audit report. Will he be able to do that now? No. Why? Because this UDIN he will not be able to generate. Because this UDIN is generated from the portal of ICAI. And that can be generated only by a chartered accountant who is a member in practice. Yeah. So that's why without this UDIN, any report that you provide, that is considered as invalid. So that's why it's considered to be a very, very important, you can say, sort of reference to be in auditor's report. Clear? Any questions? Any doubts so far? Then we'll look at some examples. Any questions? Any doubts so far? No? All right. So let's look at some examples now. Okay. Messrs. TUV and Associates are the statutory auditors of Venus Limited for financial year 21-22. At the time of finalizing the auditor's report, one of the audit team members asked the engagement partner, CA Tarun, to explain as to how the auditor's report will be signed. Help CA Tarun in explaining the same. Okay. So now, how do you sign this? First of all, firm details, firm registration number, then the partner who is signing, his designation, his membership number will be specified, date and place has to be there, and of course, UDIN. Okay, yeah, so this is how it's required to be done always. Clear? All right, so now let's look at some examples. So just give me a minute. Let me just look at some examples. Okay, so what I'll do is I'll just pick up one small case scenario, okay, that we can discuss. On the basis of the requirements that we have just looked at, you can just comment upon this. Okay. Now there's a company which is a manufacturer of cement. Okay, company has got various plants and its operations are spread across locations in India, outside India. This is a listed company and has an audit committee comprising 5 directors. Auditors of the company were newly appointed for the financial year 31st March 19, and after completion of their audit, auditors were having a discussion with the audit committee regarding the financial statements and the audit reports. This discussion is going on, okay, which is a requirement also. One of the audit committee members, after reviewing the auditor's report, asked the auditors to explain their roles and responsibilities, and was also of the view that drafting of auditor's report was not proper because the auditor had written following lines in their report. Basis for opinion. Auditor wrote, we believe that audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Auditor's responsibilities. Auditor is writing, our objectives are to obtain reasonable assurance about whether financial statements are free from material misstatements or not. Okay, now what is the concern? Audit committee member found about 2 lines contradictory, because he said that auditor at one place is saying that he has obtained sufficient appropriate audit evidence. Yeah. And in his responsibilities, auditor reduced the audit objective to obtaining only reasonable assurance. So could you understood the concern? Audit committee is saying that when you have obtained everything which you require, yeah, so every document you ask for, every information you ask for, you have been provided with. You are saying you have also received. So it's not that management has not provided, you have received that. Then why you are writing that you have obtained reasonable assurance? Okay, number 1. Auditor explained to the audit committee that it is a standard wording used for drafting the audit report and is also as per the requirements of auditing standard. In this case, you are required to advise as to what should be done in this scenario. Okay, of course, there are some options available on this, but I'm not discussing the options. I think you can just advise on this as to what should be done in this scenario. Do you agree with the audit committee? Do you agree with the auditor? What should be the right thing to be covered here? What is the right approach? Do you think auditor is right, audit committee is right, or there's some sort of ambiguity? Okay, some sort of problem is there in the report. What is your thought? Over to you quickly. I think we have discussed this quite a lot today. Quickly. Quickly, everyone. Waiting for response. Shreya says reasonable assurance is high level, but not a guarantee that material misstatement cannot exist, which is fine. Who do you think is correct in this situation? Audit committee's argument is valid or not? Shreya says no, sir. That's not valid. Okay, so now in this case, let's try to understand. See, if the auditor says that he has obtained sufficient evidence, okay, if the auditor says he has obtained sufficient evidence, does it mean that he has done 100% checking? Answer is no. Answer is no, because sufficient evidence means for achieving his objective of what? For achieving his objective of reasonable assurance. Whatever he tried to do, he has been able to complete that. His objective was what? Reasonable assurance. And that's why he asked for, let's suppose, 20 documents out of 100. His objective was never to check 100. So that's why one should not assume the objective of audit is 100% checking. Because that assumption, that expectation will go wrong. Yes or no? So that's why in this case, to expect this from the auditor, or you can say this argument from the audit committee, is not appropriate. Yeah, so somewhere they lack the understanding of the audit objective and how the audit report is required to be drafted. There's no doubt that it's a standard audit report and the wordings are also standard, but standard doesn't mean that it doesn't have a logic. So there is of course a logic around this standard wording. Yes or no? Yeah, clear in this? I think Prem has the same reasoning. Very good. All right, so now let's look at some more examples. So what I'll do is I'll just go to the study material now. Okay, now in this case, let's look at this example. Mathili Thakur is a CA student. Okay, I think Mathili Thakur is one of your peers. was perusing the audit report of a company, her eyes fell on an 18-digit alphanumeric number stated at the end of audit report below the signatures of auditor and the membership number. Make her understand the objective and significance of such a randomly generated number. Is it required to be stated in case of audit reports only? What is your view? What is your thought? Over to you. Quickly. Yes, quickly. Yes, quickly. What is your thought in this case? Shreya says only the CAs are required to sign, which is fine. But as around this 18-digit alphanumeric number, what is your understanding? What does it require? What is this coding, or what is the relevance of this? How does it really work? I think all of these pointers you need to explain here. Okay, yeah. So let's try to understand. 18-digit alphanumeric number noticed by Mathli at the end of audit report is what you call as UDIN. It's a system generated unique number. Its basic objective is what? To curb the malpractices of known CAs impersonating themselves as CAs. So somewhere it was observed that there were some known CAs. Okay, now the client may not know whether the other person is a CA or not CA. So they were signing the financial statements, they were signing the audit reports, okay, without the knowledge of the client or the company. Okay, so how do you stop that? So that's where this practice was introduced. Because if this can't be generated by them anymore, so anything that they sign is invalid. Okay, that's of no use. Okay. It helps in securing the reports and the documents issued by practicing CAs. Okay. Further, any attestation which is done, attestation means audit report, any certification, or any report which the auditor will issue. Okay, that is where this UDIN is required to be quoted. So every time when you generate a UDIN, so you will not get a standard UDIN for all the reports. No. Every time you will get a different number. Okay, for example, like you generate OTP, you keep getting different. Yeah. So it's a large one. OTP is 4 digits or 3 digits or 5 digits, 6 digits. Yeah. So it's a 18 digit and alphanumeric. So that's how it works. Clear? Everyone clear? Okay, now I think we have another example here. CA Maya Memani has conducted audit of a company. Okay. She has asked Sana, a CA student undergoing training in her office. Okay, so CA Maya Memani is in the process of audit of a company, and there's this girl Sana, who is the CA student, again very much like you. And she's doing articleship, it appears, undergoing training in her office to prepare the and Sana has been asked to prepare the draft audit report. Very good. Sana was part of the engagement team conducting the audit, because the audit is now completed, and because Sana was part of this audit, so that's why she will have clarity as to what are the things which are applicable, what are the things which are not applicable, information about the company, scope of audit, all of these things Sana will be knowing about. That's why she has been asked to draft the audit report. So again, objective is not to finalize, draft one. She has further been told to prepare a draft report expressing unmodified opinion. Unmodified opinion means, just to keep it simple for you, you can say the clean opinion, wherein there is no modification. Okay, so that's what you call as unmodified opinion. Means there is no qualification, there is no modification. So the report that we just discussed, wherein the opinion was true and fair view. That is what you call as clean opinion or unmodified opinion. Okay. After drafting the para comprising unmodified opinion, Sana feels no need to provide basis for opinion. Okay, so Sana thinks that if the opinion is clean, why do we need to get into the basis unnecessarily? Unnecessarily, you are just dragging the report. Unnecessarily, you are including different items therein. Okay, it becomes a very long document for any user to read. So, do you think that her understanding is correct? I think somewhere in the question it specified that her thought process is not correct. But why do you think it's not correct? Over to you quickly. Why do you think her thinking is not proper? Over to you quickly. Great. Prem says, basis for opinion is a must for an audit report. That's the requirement of the auditing standard. Very good. Now, as regards the basis for opinion, see, no doubt, this is the requirement of the auditing standard. It's a must. But at the same time, one also needs to understand the logic. Now, what is the logic around it? See, every time when you express something, whether you give any answer, so will you give a justification for that or not? Yeah, for example, if you answer yes, you'll say why. No, you'll say why. To say that because we are saying yes, so that's why explanation is not required, will that answer is no? Yeah, so that is what is required to be considered here. Okay, so basis for opinion is one of the basic elements of audit report as per the requirements of auditing standard. Even if the unmodified opinion is expressed, it has to be provided. So therefore, that thought process of Sana doesn't seem to be appropriate. Okay. So I think this is it that we had on the audit report today. Now, any questions, any doubts that you may have, we can discuss. Otherwise, we are through. But please remember, we are not through with this chapter and we are not through with the audit report in totality. There are a lot of things which are required to be covered, and some of those things that we are going to cover in the next sessions, they are going to be quite linked. Okay, so that's why it's very, very important that anything that we have covered, you revise that before we meet next. Otherwise, you'll find that linkage to be a sort of confusion. Okay. All right. So thanks everyone for your time and for this wonderful participation again.
Thank you, sir. And students, today we have started the chapter number 8, Audit Report. Audit report is an opinion drawn on financial statements to make sure that the records are truly and fairly represented. Okay, once the auditor is done with the audit, after completion of audit, auditor issue audit report in which he give his opinion. The opinion could be unmodified or modified, depends upon the auditor's observation or findings. So if you have any doubts or questions regarding today's session, you can ask in the chat. And students, this chapter audit report is very important from the point of view of your examination, and in practical life also you will find it very useful. Once you will clear your intermediate examination and you will start your articleship, you will make lots of audit report. So study this chapter very carefully, and you will also find this chapter in your final course also. So make your base very strong and study this chapter. Our next class is scheduled on Monday, that is 5th of April. So 5th of May, sorry. So before coming to next class, revise this chapter. Until now, we have covered 7 chapters of your course, 7 out of 11, which is more than 50%. So revise your chapters from Saransh and practice your questions from a model test paper and case scenario booklet. So if you have any doubt, you can ask. Otherwise, else we will wind this session. Okay, no doubts. So, okay, thank you, students. See you all in the next class. Yes, you can.